Well, thanks for staying with us. It's a special morning for us. ET now turns 12, and 12 is just not an ordinary number. It's a number which represents growth and new beginnings. And don't we all want new beginnings in this pandemic era? It's a special day for us because 12 years ago, the brand ET now took its first step. And from being an unknown, it has become an unforgettable brand. A brand which rests on three pillars: integrity, intelligence, and innovation. So it's a special morning for us, and we have a special guest, Manish Chokhani. Not only he's a very dear friend, a guide, and a mentor to me, he's been a well-wisher for the channel. He's been hand-holding our viewers at time of crisis. He's been identifying the boom and the bust cycles, and he's just the perfect guest today to talk about his association with ET Now and what he makes of the current environment. Manish, what is your first memory of ET Now?
Nikunj, first of all, thanks for having me on your birthday, and I wish you, all your colleagues, all our viewers, everyone associated with ET Now a very, very happy birthday. And may you go from strength to strength. To answer your question, I think you summed it up brilliantly in your opening remarks, that it is about integrity, innovation, and intelligence. And really, you epitomize all of that, Nikunj, you and your colleagues. So more power to you. Well done.
Thank you very much, Manish. So what's next in next 12 months? ET Now completes today 12 years. It's difficult to talk about next 12 years in this pandemic era, but let's try and understand what is in store for us, economy, markets in next 12 months.
So, Nikunj, if I knew what was going to happen in the next 12 months, I would have predicted that 12 months ago. So I think one can only surmise, because 12 months ago when the pandemic had hit, I don't think I would have certainly guessed that the whole comeback will be so powerful and led really by retail. And this whole trend of Robin Hood overseas, the trend of the retail investors in India becoming so powerful is something which we always wished for many, many years, that the power of the Indian saver will come out eventually into the equity markets. And I'm just so glad to see that. Also, the fact that India will start tilting away from its kind of old school of thinking of government holding assets, trying to constantly depreciate the rupee, treating wealth creators or industrialists as people who are profiting off the land. A lot of those changes that you see happening in the ecosystem, the gushing of money which is coming from overseas to fund the new kind of innovative startups in India, that kind of ecosystem, that gives you hope that the country can actually change its orbit in the next coming years and move away from, in some sense, the despair that we witnessed over the last 10 years, where we did not live up to our potential. So the next decade certainly looks very, very powerful. And within that, as you know, markets tend to discount early. So in that context, I remain quite hopeful about prospects for our country and economy in the next 12 months.
Manish, I'm going to take a leaf from the examples which you have argued and discussed in the past. With each crisis, you see a beginning of a new era, whether it was because of gunpowder or after the plague when industrial revolution shaped up in Europe. What is one permanent change which will happen because of this pandemic crisis? Is it change in savings pattern? Is it an era of low interest rate and high tolerance toward inflation? What is the permanent change because of this?
I think, Nikunj, at a more existential level, the way we all live and work, I think, has changed fundamentally. And like you alluded very rightly to, when we were an agrarian society 200, 300 years ago, mankind lived in their own farm with their own family, produced for themselves and so on. And with the coming of the industrial age, this whole era of a 5-day week, going into a factory, clocking in 9 to 5, and then kind of using the weekend to get rid of your stress. I think that lifestyle is going to change fundamentally. And we have all in this era witnessed ability to work from home, at least across the services sector. Even in the manufacturing sector, the so-called head office, branch office people managed to work from home while the workers in the factory, of course, had to show up. But I think it's changed that forever. I do think people will now be thinking more in terms of a balanced lifestyle. There obviously will be a minority which will want to go at 120%, saying that life is short and I want to pack in the maximum. But I do think it's been a wake-up call for all of humanity, and the coming of technologies, whether we are on Zoom, for example, today, if we would not have been able to function if we did not have a Geo, we did not have a Swiggy or a Zomato, we did not have an Amazon or a Flipkart. So I think those changes are here to stay for good. To me, that's kind of the big change which is going to happen. And two, this advent of larger-than-life companies, which are becoming utility type and ubiquitous in a way almost, is a trend which is only going to accelerate until the regulators finally wake up globally, that there may be too much concentration of power with too few. But it's been a trend already over the last 5-7 years. We've spoken about it earlier. Like I've said, 5 sectors have 70% of India's profit pool. Within each sector, the top 5 companies will be 70% of the profit pool. So 30 companies make up 50% of India's market cap and India's profit, and so on. So that widening is what I would hope to see going ahead.
Manish, just drawing inference from what you just said, and you spoke about a couple of companies there which have become part of our daily lives almost. Is that the trend going forward, as you've seen in India as well as across the globe, that big only becomes bigger and small remains small? Or do you think that post-pandemic we could see a re-emergence of newer companies joining the bandwagon and perhaps becoming bigger?
Morning, Aisha. Yes, again, we guys like to be a lot more democratic within our capitalism. So you like to see that. But again, I'm just drawing lessons from history, and I'm no, prophet over here to see how exactly it plays out. But if you think back to the 50s and 60s when television came and Procter and Gamble and, companies like that could just pack the shelves, took over most of advertising space, and their brands became larger than life and kind of went global very quickly. In a sense, the new platforms which are now coming, which are in theory, marketplaces, network effect marketplaces. In theory, a small reseller from anywhere in the country or anywhere in the world could be over there and could find a market. But the problem of discoverability and the problem of therefore then paying for keyword searches, getting, coming up over there, it's in some sense that same ecosystem playing out. And it tends to be a winner-take-all economy, which is the nature of capitalism. So, while as you digitize things, it tends to democratize things and it tends to kind of deflate prices. And while that trend will continue, what it also means is that it forces people towards consolidation. And consolidation inevitably, in some sense, leads to larger and larger sizes and fewer players. So this whole dynamic of capitalism, I guess, is playing out in accelerated time now with the advent of these marketplaces. What it's done, for example, again, to use the old analogy of television, is if in India you earlier had, maybe the 2 Mangeshkar sisters who were the only performers, with the coming of TV, you start seeing 20 more performers coming up. And you hope that spreads out, but 30 years later, you still, hear only of one Shreya Ghoshal, for example, standing out among all the female performers, maybe a Sunidhi Chauhan, but it's not become 30, 40 over there as well. I think it's going to be in a way similar, that you will get the new Baijus, you'll get the new Nykas, you'll get the new kind of Zomatos. But in each space, like you're seeing already, they're consolidating down to 2 or 3 players in each of these spaces. And even though it's early days.
Very interesting. A more closer event, and since it was the FOMC meet just last night, Manish, I wanted to get your views here. While you've always maintained that little bit of inflation is good, what we are seeing right now, both in the US as well as back home, is a stark contrast from what you would have thought one would be staring at. I mean, we're paying, 100 rupees to a litre for petrol each time you do end up stepping out. But that said, the bigger worry is whether or not there is a taper tantrum, which could be around the corner. Is the Fed going to hike interest rates anytime soon? Because that may not spell all that good news for equity markets.
Again, Aisha, I think This is the classic kind of end game in capitalism, that the rich world is pulling wool over the eyes of the whole kind of rest of the world. And if you think of it in a very sort of selfish India-centric manner, you just see the dynamic which is going on. Someone is systematically removing the force of gravity, which is interest rates. And while US and Europe and others will label other countries as currency manipulators, what is going on here is unprecedented manipulation of interest rates globally, holding those rates down, using the kind of implicit power of reserve currency of the world to keep printing money. And having learned lessons from the last time where you don't surprise the markets with hiking interest rates and thereby causing a taper tantrum, the signaling this time is almost 24 months ahead. And, the language being that we were talking about hiking interest rates. It's like a double derivative of, what's lying ahead. And also put in context, if these countries are now levered 4 times to their GDP, if you get a 100 basis point rise in interest rates, it's a 4% rise in the total outgo of money in these countries. And 4% rise in interest payments effectively is more than the rate of growth of the GDP of these countries. And therefore, these rates are not going to go up. They may keep signaling 25 bips and 50 bips and all of that, but it's not going to become a 400 basis point US interest rate if they can help it. It's never been a 400 basis point interest in Japan for the last 30 years. And what we are living through now is the Japanification of the world. And it will be in Hindi, we call it, the market doesn't crash, it solidifies. And it'll become harder and harder and harder to make money, because if everyone is getting money at 1%, and indeed a lot of the new kind of age companies are getting them at effectively no cost of capital, because you can burn money in thousands of crores for years on end, because it's a winner-take-all market. It is going to be that kind of world. So I don't think these price signals from interest rates are going to be as valid as in the era when we grew up, because central bankers have effectively given away the power to give signals about inflation using interest rates, because the markets now know they cannot go to 3, 4, 5% anymore. And that's how I think it's going to play out. So this whole drama of rates are going up, watch the Fed, that was kind of yesterday's story. Life's moved on.
Okay, but back home, Manish, would you say that the long-term drivers are intact? All and every parameter, from market forces to COVID to policy to consumer behavior, is it headed in the right direction for India?
Yes, we have the tailwinds, because what COVID has done is in a way accelerated trends of the past. And, coming into this, if the developed world was already, weighed down with its demographics, it was already weighed down with debt, it was already weighed down with deflation. These were the battles which were being fought going in. And therefore, this argument that suddenly, miraculously, they will turn on a dime and start hiking rates and fight inflation, whereas the real fear there is about deflation. The fight about immigrants coming in is not going to change your sort of green cards, or your H-1Bs are not going to change, because you don't really have jobs, and you don't really have all the older people who are retirees looking to take more and more and more risk in the coming world. So that battle lines are drawn over there. It does play into a lot of the strengths, and India finally seems to be getting into a kind of a regional trade agreement, sort of alliance with someone, instead of being this, thumb sticking out against the rest of the world. And if we do become part of these sort of global supply chains with the China plus one kind of game going on, and with the changes we are making with PLI, with the changes we are making in our taxation systems, ease of doing business, and these are all trends lines which can only accelerate now. I don't think there's going back. I do think there should be good days in the real economy for people like that. I'm not yet venturing to hazard what happens to the multiples over here. And again, while I use the Japan example of, multiples have held there also for 30 years, despite being a low growth economy. It's a world I have to get my head around, that do 2% interest rates mean a permanent elevation of, PE multiples, or is it something which we kind of are just entering blindfolded? And we may live to regret, because these prices will eventually only have to track earnings. They can't perpetually keep going up, the way they have over the last 12 months. So a couple of jumbled things in there, but that's sort of where my head is at right now.
Manish, so for next couple of years, I'm trying to address the investor here. What should the investor focus on? Intellect and innovation, which is focus on the Nikias, the Zomatos, and the deliveries of the world whenever they will go public? Or it is time now to say, look, inflation is back, and deep cyclicals and perhaps asset owners are the ones which could also make a comeback?
Yes. So, Nikunj, there are two kind of questions in there. Number one is what will happen, and the second is what, the mass majority will think will happen. And typically what the majority thinks happens first, which is, traditionally we've been used to this rotation away from growth to value, or what you're calling deep cyclicals and so on, and that trade plays out. It's a trade which plays between developed world and emerging markets, and then vice versa. It's a trade which plays between financial assets and commodities, and then vice versa. But I think what I'm kind of thinking more and more in my head now is that a lot of the old patterns are about to be breaking down. So while you could, and for me, the 12 months is the short term, you do get the trade, which is the trade you're alluding to, and it is actually playing out as we speak, so nothing to say against it. But if you think that money remains abundant and it's not going to get scarce, and the mere fact that interest rates are going to go up by 50 bips over the next 2-3 years is not something which is going to make money tight. So in a world of abundant money and liquidity, which is being printed, what the world eventually values is scarcity. And that scarcity could be a work of art. It could be a rare company, like you said, in India is a Nykaa or a Byju's or something. It could be an asset class which everyone kind of freaks out over, like a Bitcoin. And valuation completely goes out of the window because I want this scarce asset. And I feel the markets, in some sense, with the amount of money which has been pumped in, has become like a art market rather than a financial market. So like we go here and say, I want to buy the Hussein painting or the Raza painting at kind of any price, and it has no linkage with value in terms of per square foot or because you're benchmarking to somebody else's price. There's no underlying value in the way we grew up as value investors, valuing cash flow and so on. The same analogy has played out when you see if a Bitcoin can go to $1 trillion, and even when it crashes, 83 to 85% of people don't sell their Bitcoin, unlike what they would have done in the financial markets. It does give me a signal that something new is going on. There's a different set of millennial buyers out there who think and behave very differently. And like you want the Birkin bag, you want to own a Tesla share, and you want to own an Amazon share, and you can, with Robinhood, buy even a quarter share. And that may be what you call the market becoming a voting machine. And the voters are changing, and they are younger, and they haven't read Graham and Dodd, and they don't really care about Warren Buffett. And maybe it's the era of Cathie Wood and the others. So we should just kind of see this for what it is. I'm not saying it's right or it's wrong, but this is the market we are operating in now. The dynamics have changed. The ETFs are price agnostic. So if you can put if you can double the AMC stock, for example, in US, which is the theater chain there, and you can double it in a day, it tells you something, that something is going on. And is this like a bubble which is going to get pricked? But the bubble gets pricked when money gets sucked out, which is not happening. So, how long does this bubble expand? Does it get bigger and bigger and bigger? Or does it solidify, like I said? That's really the dilemma in my head. And I don't think I can venture to say whether this will happen or that will happen. But it is certainly a world which is valuing scarcity a lot more than productivity.
Manish, we've had a long association, so I'm going to be quoting a lot of our old interactions, not because it's our anniversary today, but just to bring perspective for our viewers. Over the years, you've always said that ultimately markets will follow earnings, something which you alluded to. And you always said that one should try and identify the big pools of profit, the big market size opportunity. So where to your mind are the big pools of profit right now? Because if you associate with those pools of profit, you will have a rewarding experience.
That's very true, and well said. And Nikunj, honestly, I'm saying that's the dilemma in my mind. That what is the profit pool of which period? Because earlier the advantage I had is I could look out 1-2 years ahead of the market and pay for that 2 years forward profit. For example, let's say in the telecom wars, when it will consolidate, people will pay for Bharti 2 years later, as an example. But in the world which we are now living in, if an Amazon can make a loss for 10 years in a row, if a Paytm can make a loss for 10 years in a row, and the market still value it, or Flipkart is continuing to make losses for kind of years on end, and the market values it, what is the profit pool of which year where the market is focused is a landing point I am unable to reconcile right now. So I'm again saying I'm at the point where again, like Howard Marks says, we study cycles, but and you always hesitate to say this time is different, but it may be this is a kind of the change, like you went from agriculture to industrial economy to digital economy. There is something going on with these new network effect marketplaces, with the new pools of capital, with the way a vision fund will operate on $100 billion balance sheet. The rules of the game are certainly changing. At one end you have vision fund, at the other end you have Robinhood. And no one seems to care about profit or profit pools anymore. So let's see how the story plays out. In a traditional sense, it's easy. I can give you the answers. The profit pool don't change in India. We will get to somehow or the other. We'll muddle our way through. We'll get to $5-6 trillion by the time we do your next kind of decade show. We'll probably be saving more than $1 trillion. So financialization as a theme in India will play out. We have a country which is kind of, I've always spoken of India 1, which is 20 million people, and India 2, which is 200 million people, and an India 3, which is 1 billion people or thereabouts. And if you think of consumption patterns, we sell 3 million cars, 6 million air conditioners, 12 million refrigerators, 24 million two-wheelers. So there is that value chain of growth which has to occur. And could we get to 6 to 12 million cars? China is already at 25 to 27 million cars. Can we get there? There is money to be made with the Indian consumer, but it's a very, very narrow market today. And until we can see our per capita income rising, we've lost the game to Bangladesh today. We are behind Bangladesh in per capita income. But if we can get per capita income up, if we have the strength to take the rupee up and not sell our assets to the foreign world in exchange for buying oil from them, which seems a very bizarre trade to me, but that's how it is. If a lot of these things happen, the profit pools of explosion on consumer, healthcare, IT, financialization, platform plays, privatization beneficiaries, people who are taking over assets which the government would have run. So there is a lot of money to be made over here, no doubt about it. And eventually, of course, you stay focused on those 5-6 areas. But all I'm trying to get my head around is, has the playing field, in a sense, changed from a field which one grew up learning about in economics 101? Because right now those lessons are all out of the window. I guess that's really what I'm trying to say.
Well, brilliantly put across. They say nothing changes in life, it keeps on repeating itself, which is that one day this cycle shall also end. Now, it's impossible to predict when and how soon, but there are features and there are elements when they come together. Market, experienced veterans like you, they try and identify a pattern. I remember in 2008, you used the word that India is going through a mania. Are you getting any sense of mania anywhere in any asset class? Because based on historical parameters, forget 5 out of 10, it is now 9 out of 10 brokerages which are saying that we are trading at levels, valuations which we've never seen before.
So that's really what I'm confused about, that in an era of 1% interest rates, and if price to earning multiples in a sense are reciprocal of interest rates, that if we used to have a peak interest rate on the GSEC of say close to 8% in India, markets would tend to value 12 and a half time PE multiple as the base case, therefore, for the country. And our GSECs never really went below 5%, and therefore at 20 multiples, which is the reciprocal, markets tended to top out. But in a world which is supplying you money at 1 and 2%, is 20 the right multiple, or is now 50 the kind of new norm? That's the debate. It's back to, as I say, use Japan as the example. In '87, if Japan could kind of own the whole of the world, being a tiny sliver of an economy, and it could control all the US studios and almost all the land equal to California and so on. There is something funny going on. The elements of the mania, like the year 2000, are very much there. In the US, I see it when you see the rise of SPACs, where people are putting hundreds of billions of dollars into blind pools of capital, that someone will take over something and will profit from it. And even on that blind pool of capital, the guy can make money. This has even gone beyond paying the hedge fund manager 50% of profit for doing something. This is something crazy going on. You've seen things like AMC stocks, which I don't know when and how people will go back to theaters. But if you can create that kind of market cap, and it's not a small company to go completely crazy. If you can create a new asset class called Bitcoin, which is really a computer program, and someone else could do it, and you could have Ether or other similar assets coming out. It's certainly not rare. Something is not smelling right, and I can't call this the end of the bubble, because normally bubbles get pricked when someone who's over levered goes bust, or the central banks come in and prick the bubble. But this time, the fireman is the arsonist. And they're going to keep pouring this down, and they want this fire to burn. And while we keep talking about inflation, what is a rise in asset prices other than inflation? Because it suits us, we call it a bull market. But this is inflation. This is craziness going on. And this is upsetting structures of industries and companies, because the least productive player can also now stay alive, and therefore the signals which capitalism would give you from interest rates and currencies and capital markets have actually failed right now. And what we are going through is kind of a rule of the mob, and really that's what a Robin Hood trader is. You can decide I want to short squeeze someone and cause prices to dramatically shoot up and make money all along GameStop or whatever was going on. A lot of craziness going on. This is reminiscent of 2000, but I don't yet see how this ends. And does it end, like I said, with a crash, or does it end with we just decay and wither for a few years on a global context? In the Indian context, it's not. It's nowhere close to that kind of mania. I don't think we see that in the public markets. There are elements of it, of course, in the private markets. But when a lot of these companies come to public markets, they get valued how they trade. We'll see them. But it's not a colossal destruction of wealth like you saw in 2000, where the leading tech stocks fell 65%. I don't see that over here as yet.
You forgot the mania, Manish. I mean, nowadays it takes one tweet from someone like an Elon Musk to move the markets.
But that's what I'm saying, that we are living in sort of a hyper-speed world. And there's something not smelling right, but sometimes I feel maybe I'm just older and therefore I've become more conservative. But it's not smelling right. But at the same time, the underlying drivers in the real economy are actually good. And normally in phase 2 of the markets, when money gushes in, that money gets sucked in by the real economy. So normally this year would have not been a great year for the stock prices, but that money would have come to the real world, got used in productive assets to accelerate earnings, which would have held markets. We would have probably gone sideways this year and then continued a journey up, which is what I'm still hoping that's the way we play out. But the accident is going to come from elsewhere in the world, and it's going to come from maybe a currency market or a bond market, where someone is going to freak out that this, setting different fires and burning the fires all the time, bigger and bigger, and occasionally saying, we'll sprinkle some water on it by putting 25 bips up, and saying, of course, we are aware that the fire should not spread. That's really a game going on right now with the central banks. So let's see.
Okay. So markets, economies, everything aside, what's next for Manish Chokhani? More meditation or more singing?
Both. Singing can be meditative too.
Yes, it
It's
is. It is.
lots of
Okay,
things.
Manish, great to have you on
Great.
the show, and thank you for being ETNA's.
Yeah.
Sorry, go ahead.
No, I'm saying I hope I'm not sounding a bit cautious on a birthday. It's a day to celebrate, but someone has to say it. That we can't be like rah rah rah. Party's going to continue. This is a glorious bull market forever. Nothing can go wrong. Let's go in with our eyes open. Let's keep our eyes wide open and be a lot more aware of what's going on.
Yeah, absolutely, and that's what makes the markets, right? But anyway, Manish, thank you so much for taking the time out. We'll let you go on that note. And thank you for being an ETNA friend for the last 12 years, and thank you for never saying no to us.
All the very best. Happy birthday again.